Hey guys, I'm Phil Town from Real One Investing. Today, I'm going to explain everything you need to know about stock options. Maybe. It's worth saying before we dive in that you should always apply the Rule 1 principles in investing, even when you're doing a stock option. Here's why. You wouldn't want to own a company for 10 years, then you shouldn't own it for 10 minutes. That's honest to God truth. When we do stock options, we rely very, very strongly on understanding the business, the moat, the management, and the margin of safety. And that's what gives us an edge in the market. Virtually all, I shouldn't say virtually because that implies it's literally everybody, but almost all options investors are efficient market theorists. They actually believe that at every moment, the stock price moves quickly to adjust for whatever's going on in the market and becomes a 50-50 bet whether it's going to go up or down in the future. We don't think so. We think that the emotions in the market can create an opportunity where we can buy a company, we can also do stock options with much less risk than a 50-50 bet. All right, so guys, this video is meant only for education and entertainment purposes. Nothing I discuss is going to be advice or recommendations. It's really important we get that out of the way so that I can really talk about this, because we don't talk about stock options very much. And I certainly haven't done a lot of work educating you guys about them. So the first thing we're going to do is talk about what they are, okay? What they are. So a stock option is simply an opportunity to get either a right to do something with the stock that's underneath this option, right? This is called a derivative. And that stock, we have a right to do something with it, or we're obligated to do something with it. Those are the two things that happen in stock options. Either we've got a right or we're obligated to do something. Now, stock options can be very complicated, and I'm not going to get deep into them in spite of what I just told you guys. I'm going to get into them a little bit. We go deep into them at our workshop, and believe me, you're going to need some time to work it out. And even then, you're going to have to do some homework to really get solid on it. But man alive, options give you an opportunity to buy stocks at a huge discount and to create enormous cash flow. And we use them all the time in every portfolio that we have. They are relatively simple the way we do it, but it takes some time to understand how they work. I'm going to explain one of them right now that we do all the time, and hopefully this won't blow your mind. So here we go. The option that we do more than any other option is called a put option, and we sell it. When we sell a put option, we are effectively becoming a casino, and we're the house. So we are selling something, someone's paying us for it, we're collecting the money. And what we're doing is we're obligating ourselves to do something with that underlying stock. What this person got when they bought this option from us is they got the right to force us to buy that stock at a set price for the length of time we agreed on. So typically it might be 30 days or 10 days, something like that. So for that period of time, they can force us to buy that stock at a set price. At a set price. Now, the way Warren Buffett uses this, the way I use it, is really simple. We're basically saying, I want to buy that stock at, let's say, $80 a share. Right now, it's at $90 a share. It's too high. I don't want to buy it at 90. I really want to buy it at 80. And people are offering through their broker, they're out there offering in a market that I can see on my computer screen. They're offering to pay me $7 a share to be able to force me to buy that stock at $80 a share for the next 60 days. They're willing to pay me $7. Why? Well, the stock price is dropping down. It's coming down from 100 to 90. It's at 88 now. They're afraid it's going to keep going. So effectively what they're doing is buying an insurance policy and saying, hey, I really want a piece of insurance that says if this stock keeps going below 80, I know I can get out at 80 because you are going to be forced to buy it from me. And in order to force me, they got to pay that $7. Cool. So I'm the house. I'm going to collect the $7. And why shouldn't I be worried about buying this stock at $80 if now it's at $75? And the answer is because I want to buy it for $80 right now. I'm trying to buy it for $80 right now, but I can't. The market hasn't gone down far enough. So what I'm doing is I am basically saying to the world out there, I want to buy that at $80 and I want you to pay me to do it. And that is what we call a Rule 1 put. It's selling somebody an insurance policy at a price they can force me to buy the stock that I want to buy it. I want to buy it. And let's say it works out that in, 60 days, the stock's at $75. They forced me to buy it at $80. So they're happy they got their insurance policy, but they might take note. It paid $7 to get it. And I actually ended up with the stock at $80 that I paid them minus the $7 they paid me. I'm at $83 and I got a 10% discount on the stock. We love to do this kind of stuff and we do it all the time. It helps lower our basis, helps create cash flow, and it's really fun. And it's very, very low risk because we want to own the stock at that price. Now, what's the difference? So that's one. I come to class and I'll explain the rest of it. The difference between buying stocks and trading options is substantial, okay, depending on how you do it. What I just described to you is really no different at all than just coming out and buying the stock, right? I mean, I have to want to buy it at $80. So if they put that stock to me, that's what it's called, they put the stock to me at $80, I got to be happy with that. And that means I've done my homework, just like I'm going to buy a stock. Everything is identical. The only thing meaning that's different is that I can't buy it at the margin of safety that I want. In this case, the stock's price 88. I want to buy it at 80. That's my margin of safety. I'm not going to, betray that. So I'm going to try to do something right now at around the margin of safety that will get me some cash flow while I'm waiting. So buying stocks and doing a Rule 1 put, no difference at all. We work it out the same exact way in terms of the way we do our research. Now, there are forms of options trading that are different and that take us from being an investor, which when we do a Rule 1 put, we're investing, we're trying to buy that stock at 80, into the trading of options. And that's a different world. We do that. And it's important to know we do it. The reason we do it is because it is a way to create a high rate of return with relatively low risk when you only have a few $1,000s. You can actually do those kinds of trades, very specific kinds of options trading that we call Rule 1 options, that are options that we're doing with very low risk. I'm talking the level of probability of losing on that particular options trade at 90%, 93%, 95% probability that we're going to win, 5% probability we're going to lose. That's how we want to do these kinds of options trades. Like I said, we're being the house. So that's options trading. And the difference between that and investing and doing Rule 1 puts or buying the stock directly is simply that in options trading, we are going to have losses. I just said there's a 5% chance we could lose. That's one chance in 20 that we're going to lose. But every once in a while, that chance comes through and we end up taking a loss. So you have to do options trading properly. And we definitely want to explain this to you guys in our 3-day class. Now, if you're interested in learning a lot more about stock options, because I just touched my toe in the water here, definitely join us at one of these live 3-day workshops. They're fabulous. My coaches and I work with you one-on-one to kind of go through all the research steps. We give you homework. You actually practice this in real time. You're going to spend 7 hours with your coach working this through during a 2.5-day program. And I would love to see you there. It's a great way to get started, whether you got a lot of money, just protecting a portfolio, or whether you're really trying to figure out how to get going with very little cash. Now, I'd love to hear from you guys. Do you have any additional questions about how stock options work? And if you don't, you probably didn't understand the concept. You should have a lot of questions. So leave them below with your question and leave a comment there, and I'll be sure to follow up with you. Now, thanks for watching, you guys. Go play. Hey, if you enjoyed this video and you feel it was valuable in teaching you more about how stock options work, hit the like button and please share the video with your friends. And if you want more investing content, just subscribe to my channel. And don't forget to click the button on the screen for a free gift. And thanks again for watching.